The industrial production data corresponding to the month of May was just reported. Contrary to most indicators that have been showing that the US economy has been slowing, industrial production appears to have accelerated in May. But remember, the devil is in the details, so we need to do our homework. Now, for context, industrial production data are some of the most important economic data that the government reports each month. In particular, this data tends to be an excellent indicator of cyclical trends in the economy. Now, if you're watching this video, it's probably because you realize that in order to understand what is really going on in the US economy, you can't just rely on headline figures provided by the government reported in the mainstream media. So in this video, I'm going to share with you the most important insights that I have derived from a detailed report prepared by my team that scrutinizes all of the data for each and every one of the more than a dozen categories that comprise the overall industrial production data. By looking at these numbers, we're going to be able to come away with some very interesting insights about the outlook for the US economy and financial markets. Before getting into the more detailed analysis, let's go over the headline figures as reported by the government. Industrial production during the month of May grew very strongly, 0.87% for the month. This actually ranks in the 87th percentile all time of monthly growth figures. Very strong growth. More importantly, the growth was led by the manufacturing sector, which had a really strong month. The next table has three breakdowns of the manufacturing sector, and it shows the growth and momentum of the different components of manufacturing on different time levels. Now in this table, I really want you to focus on the 3-month annualized rate of change and compare that to the monthly rate of growth as well as the 6-month rate of growth. And what you're going to see here is that the 3-month annualized rate of growth in manufacturing is actually still below average despite the strong showing during this past month. In addition, what we can also see here is that the 3-month rate of change is not a whole lot different than the 6-month rate of change. So we have to keep in mind that manufacturing data tends to be quite volatile from month to month. Right now, we don't seem to have any sort of a momentum shift in 3-month rate of growth relative to the 6-month rate of growth. So far, all we have is an acceleration of the 1-month rate of growth relative to the 3-month rate of growth, but you generally cannot really trust just 1 month of data when it comes to manufacturing because manufacturing data tends to be quite volatile. One very positive thing about this report that can give us a little bit of confidence that this rebound that we're seeing in manufacturing might be for real is that it was extremely broad-based. If you look at the 1-month column, almost every single category had a growth rate that was above the 50th percentile. And that's a very positive sign because when you have growth that's just led by a few categories, in other words, the growth is very narrow, when growth is narrow, you can't really trust it as a signal of underlying economic strength. But the growth here this month in industrial production was quite broad. This next set of tables focuses on just growth for this month and tries to identify which sectors of manufacturing contributed to the reported growth rate, and in particular, which sectors contributed to the acceleration of the growth rate. So it's very interesting to identify the sectors that actually contributed the most to the acceleration this month, and that was clearly in the manufacturing sector of industrial production. So let's review what this means for the overall outlook for the US economy. First of all, I do think there's some encouraging signs here. The fact that almost every single item in manufacturing and industrial production grew at an above average pace and that almost every item actually accelerated relative to the prior month is a very interesting and strong signal, and it suggests that something positive actually did happen during the month of May. Now, having taken that into account, I want to emphasize that this is just 1 month. And if we look at the 3-month rate of growth, which is really the statistic that I tend to favor in looking at almost all economic data, the percentile rank of growth in manufacturing is actually well below average, even after you factor in this very positive month. So I don't think that we can have a lot of confidence yet that we are really accelerating on a sustained basis in manufacturing or in industrial production more generally. I think we're going to have to wait for at least 1 or 2 more months to see if the positive signals that we got this month are going to be continued in the following month. Having said all that, the nice little surprise that we got here from industrial production is going to cause economists to bump up their estimate of growth for the second quarter. So this is actually a contrary sign to what we've been getting from some of the other data. Earlier today, retail sales came out very weak. A lot of the manufacturing PMIs for the month of May also came out very weak. This manufacturing report was one of the only strong pieces of data that we've gotten in the last couple of months. So we have to put this into context. The vast majority of other data from April and most of the data so far from May have been coming out pretty weak. In fact, just earlier today, we got a retail sales report that was actually quite weak. It's not at all unusual for some economic data to be strong at the same time that other is weak. In fact, this is how it usually is. So that's why we look at a whole variety of economic indicators, and we don't just focus on one economic indicator. In this case, I think it's pretty safe to say that the vast majority of economic indicators have been indicating that the U.S. economy is A, slowing significantly, and B, slowing down to a pace that is well below average. Beyond that, I don't think we can say much right now. I don't think that there's necessarily a risk that the U.S. economy is going to fall into a recession. I think that the only thing that we can actually say right now is the U.S. economy is decelerating, and it's decelerating to a rate of growth that's a bit below average. Let's turn our attention now to how this might impact financial markets. I think the impact is going to be very muted because this is just 1 month of positive data, and the 3-month rate of growth, as I mentioned earlier, is still quite below par in terms of historical averages. So there's no clear trend yet, and therefore no clear signal for markets. I'm really interested in what you think. Please leave a comment and let's get a discussion going on where we think the U.S. economy is going. Do you think that this manufacturing report provides an interesting signal? I'm really interested in all y'all's opinion. So let's get a discussion going in the comment section and subscribe because my next couple of videos are going to be very interesting.